Have you ever wondered why, despite the huge salary, despite several salary increases, or when you're making so much money in your business, it seems the money is not just enough. And to you, it seems as if the more the money comes, the more the expenses. And you are always thinking, oh, the more I make money, the more my expenses, and I don't even have enough to save. And at times you might even think, is this a spiritual problem? It is not a spiritual problem. The truth is this: what you don't track, you can't control. As a financial professional approach, I'm so excited today to share this knowledge with you. And I'm going to be showing you how you can track your money and make yourself accountable to how and where your money goes. Today, we'll be discussing personal finance. Specifically, we'll be talking about budgeting and understanding your investment profile so that you'll be able to know, based on your appetite risk, the investment options that are best for you. If this is what you really want and this is what you're looking forward to have control over your finances, then join me on the other side as we take it further deep into this topic.
Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong, in this rhythm we belong. Skies are high, but so are we, building castles where we're free. Gonna rise up, we won't fall.
Alright, you're welcome back. You see, when you talk about your finance, one of the things that is very important for you is to have a good control over how the monies that comes into your hands, whether that pass through your hands or through your bank account. This is what has kept a lot of people below what their financial standards should be. And it is important you take absolute control. Well, just before we continue, I want to ask you, if this is your first time, why don't you click on the subscribe button and also click on the like and the share button. If you've been listening to me, please click on the like button so that a lot of persons can see this particular video. So let's go. We're going to be starting from the basics. Let's start from where we need to start from. So let's look at what is budgeting, and also we are going to look at what is not, what budgeting is not. So let me demystify what budgeting is and what budgeting is not. You see, a budget is not simply a list of bills. Many people believe that by budgeting, what we mean is writing down all your expenses, your rent, your electricity bill, transport bills, and other expenses. However, if you have done that before, you will observe and you will notice that you still struggle to save money. You still struggle to invest. You still struggle to increase or to grow your wealth portfolio. So that is because what you are doing is just writing expenses down. That is not budgeting at all. So what really is budgeting? Budgeting is the process of telling your money where to go instead of wondering where it went. Do you get that? Telling your money where to go instead of wondering where it went. It is the cornerstone of financial freedom. While it may seem like a small task, the impact of budgeting is enormous. When you understand where your money is going, you take control of your financial future. Now, let me shock you. You see, many times, many of us think the problem that we have is the amount of money that we are receiving. I'm not receiving enough money, my income is not enough. No. One of the key things is this. If you know that you are living from paycheck to paycheck, most of the time it is not the income problem. It is often the spending problem. Just let's think about this. You know, there was a time when you were earning maybe 30,000 naira, 50,000, 40,000, 100,000, maybe as a core member, as an intern, and so on. And you were surviving, you were living well. Then now you are earning 200,000, 500,000, and you are still having that challenge. You are still struggling to save. You are still struggling to get out of debt. So what changed? Then there must be something that you are not doing well. Now, the issue is not always about how much you earn. Many people experience what we call lifestyle inflation problem. You know, as the income increases, their spending level increases. Oh, that's when you know my children are not supposed to be going to this school, they're supposed to be going to this kind of school. Oh, I'm not supposed to be living in this neighborhood, I'm supposed to be living in this neighborhood. So as the income increases, your spending also increases with it. We call it lifestyle inflation. So there's no way a person that lives like that will not move from paycheck to paycheck. This is why budgeting is critical. It helps you to track your spending habits while you are working on increasing your income. Because when you are able to track your spending habits, you'll be looking at, okay, what can I do to meet up? So it will make you think outside the box at how you can increase your income. So having established what budgeting is, let's look at the 4 essential components of a budget. So when you want to prepare your budget, what are the 4 essential things you have to look out for? Number 1, there's what you call your mandatory bills and expenses. We can call it the F, the first F, which is your fixed expenses, whether you like it or not, they must come. What are those expenses? Those expenses are like your rent, your electricity bill, your utilities, your transportation, your gym fees, your school fees or your children's school fees, and other necessities. Even the feeding allowances in the house, those are under mandatory bills and expenses. This one, you must account for them properly in your budget. The next one is what we call the debt repayment. Debt repayment is maybe you are owing, you took some loan either in the office, in a cooperative, in a mortgage, school loans or whatsoever. If you have any debt of such, you must make provision for it in your budget. Don't say, oh, I'm waiting for when I'm going to have a kind of lump sum amount. When I have a lump sum amount, I will offset my debts. No. Budget has to be, you have to be consistent. But if you are debt-free, oh, that's great. You can now focus on building wealth rather than servicing of debt. Now, the next one that is important is what we call the savings and the investment. The savings and the investment are, in fact, they are the very first kind of expense that you have to consider when you are looking at budget. Now, let's quickly look at what is the difference between savings and investment. You know, saving is capital preservation. If you have 50,000 naira, 50,000 today, and in 6 months' time, if you put it in a bank, it remains the same 50,000. It's not going to change. If you are not careful, even the value is going to be eroded by inflation. On the other hand, investing is putting money into assets or financial instruments that will grow your capital. This ensures that money is not kept in one place in the period of inflation. So that's why we say it's always good to invest. You save money a bit and then you invest it. Inflation affects everything from fuel prices to household goods. If your money isn't growing, at least at the rate of inflation, you will struggle to maintain your current lifestyle. So what are we going to do to improve it? That's why we'll be talking about this budget. Inflation affects everything from fuel prices to household goods. If your money isn't growing at least at the rate at which inflation is growing, I'm sorry, you will struggle to maintain your current lifestyle, let alone improve it. So this part of the expenses that we call savings and investment, we often categorize them as your future. You know, the first one that is mandatory, I said fixed. Now this one, we call it a future expense. Now let's go further. There's this other aspect that we call entertainment, leisure, and giving. Now, this type of expense, these are the this part of your budget, they are the non-essential spending, just like traveling, dining out, having a massage, social events like birthdays, and bridal showers, and so on and so on. So to determine whether an expense is under your need or your want, you just ask yourself this question. Supposing or assuming my money, my source of income is cut into two, is halved, and I have to eliminate some expenses. What are the expenses that I will eliminate? Now, the expenses that you eliminate, those are your wants. Why those ones that remain are your needs. So we have your needs, your wants, and your future. So at times we always say the fixed, the future, and the fun expense. So I might be using those terms as we go along the way. So now there's something else that I have discovered. There's something else that I've discovered amongst people that I've talked about budgeting with. There are some of them who say, coach, what is happening? I had a solid budget, but half through the month, something unexpected happened and everything fell apart. Yes, this often happens. But why does it happen? When you don't prepare for miscellaneous expenses in your budget, the budget is bound to fail because life is dynamic. A lot of things happen. So a working budget must be flexible and account for unexpected. So you might not need to put so much in your miscellaneous. Imputing this miscellaneous, you'll be able to adjust for some things that you never even thought of will occur. So by structuring your budget with these 4 key elements: mandatory expenses, which we refer to as fixed expenses; debt payments, savings and investments, which we also refer to as future expenses; and then discretionary spending, which we also call fund expenses. So if you're able to do this, you'll be able to create a system that ensures financial stability and long-term growth. So at times people prepare their budget, and just as I said, when you prepare the budget, you must also prepare for miscellaneous so that your budget is not messed up. Because if a rigid budget will always fail. So depending on your lifestyle, make provision for those miscellaneous. So now let's recap. Let's just quickly recap. We said we have mandatory bills and expenses. We have debt, repayment, and savings and investment. We have wants and miscellaneous, as the case may be. So at this point, you might be wondering, how much of my money should I put into mandatory bills? How much should I allocate to my wants? And how much should I put to investment? There's no hard and fast rule, but there's a kind of general budgeting rule of thumb, which is called the 50-30-20 budget rule. This rule suggests that 50% of your net income. When we say net income, that means it's not gross. Gross income includes government money. That's what when you talk about your tax. So 50% of your net income goes to your mandatory bills, while 30% now depends on the age at which you are. Maybe if you are anything above the age of 40, 30% of your income should go into your savings, investment, and debt repayment. If you are younger, then that 30% should go to your wants and miscellaneous. Now, 20% should go into your savings. That is, if you are under the age of 40. But anything above the age of 40, I will encourage that 20% should go into your miscellaneous, because at this point, you need to be saving more than ever before. All right. So, but in reality, you see, what we've noticed is that most people spend more than half of their salary on the mandatory. If that is your case, no wonder you will struggle. You will struggle to save, you will struggle to invest and everything. At most, you shouldn't go beyond 60% when it comes to your fixed or your mandatory expenses. If your spending is more than that, that is we're talking about when you take your rent, the school fees, whether children or your own school fees. You talk about you talk of the utility bills and every other thing, those compulsory bills. If you add them together, let's say your total income is 500,000, and when you add all these things together, they amount to about 250,000. Yes, then you are within limit. But when it starts going to, your fixed expenses starts going to about, out of 500, it's going to about 300, 400, then you are living beyond your means. It's very likely that maybe the house you are living is more than your income, or the school that your children are going to is far beyond what your income level can carry, or there are some other things that you are engaged in. So I have given the explanation of the 50%. Let's talk about the 30%. You see, 30% of your income should be allocated to your savings, investment, and debt repayment. You see, if you are old, maybe you have debt in the office that you have to service, you have to allocate a percentage of your income to service it. Now, don't wait until I'm expecting one big lump sum of money. No, put part of your money income aside to service that debt. Also, at least 10% should go into your savings, another 10% should go into your investment. I think this idea is also good, whether you are above, I told you above 40. Maybe if you start early in life, maybe you are at the age of 20, if you adopt that strategy also, if you look at this at the chart, we said 20% goes to your savings. I want to suggest from experience and what economic reality is, I want to suggest that 20% should go for your wants, while 30% goes for your savings, investment, and debt repayment. Well, if you don't have debt repayment, that is fantastic. Then you have a lot to put more into your future. We consider your savings and investment as your future expense. Remember, if you don't prepare for the future, nobody's going to prepare it for you. Money that you have not saved will not save you. So 20% goes to your wants, just as we are trying to reorganize this chart. So at this point, I want you also to consider something. Budgeting is not about restriction. Many people think budgeting will limit their financial freedom. No, but it actually helps on your path to financial freedom. You see, the 20% allocated to your wants can be regarded as your guilt-free spending. You can enjoy your life without feeling financially strained because you've already accounted for it in your budget. So budgeting is not restricting you so that you will not enjoy the life that you want to enjoy. So now let's look at the goal is to be wealthy. Is that not your primary goal? Not just look wealthy. There are some people, they flaunt different designer bags on Instagram, but go and check the bank account. The bank account is not saying the same thing. Don't make the outside look so fanciful while your bank account is suffering. So let's further go into this. I said something that one of the major challenges that we have is spending habits. Our spending, not the income. You see, there are times you see something and you say, I want to buy this thing. You see, there's a difference between paying for something is different from the fact that you can afford it. When you say you can afford something, you are saying that you can pay for it without compromising your financial stability. So if you are buying something and it's not going to prevent you from saving or from servicing your debt or from investment, then you can afford it. Just like what was it Jay-Z that said something? I think it was Jay-Z. He said, if you can buy something twice, then you can afford it. But if you can't buy something twice, that means you can't pay for something twice. That means you can't afford it. So you look at what alternative do you have. So let's talk about savings and investments a little. How do you get into investing? If you have 10, 20, 100,000 disposable income, into what are you going to be investing that money? Because it's not just enough. Like in our own organization, Read Vision, we advise you, save your money. At a point, once the money becomes a lump sum, you can take it up and put it in an investment. So before you start asking, okay, where should I invest my money? Which vehicle should I put my money in? Then one of the questions you will ask yourself, what are my financial goals? You must ask yourself, if I want to put my money into crypto or forex trading or the stock market or real estate, I want to ask myself, what is my financial goal? So you must be able to define your financial goal. You must be specific. It must be clear, and you must be realistic about it. So your financial goal could be, I want to build an emergency fund, or I want to save for early retirement, I want to buy myself a home, I want to create passive income, I want to become debt free. Any of this could be your financial goal, so you list them. Number two, educate yourself on the investment options that are available. If you're in Nigeria, we have the ETFs, we have stocks, we have treasury bills, we have the money market, we have the real estate. You can even venture into crypto and so on and so forth. But you know what? Many people go into investment blindly. All they own is that how much is it going to return? Will return what? Have you studied it? So for those of you listening in, you are educating yourself. And by the way, if you are yet to click the like and share button, please do so now. And if you are yet to subscribe, click on the subscribe button. The next one we want to look at is you match your goals with suitable investment. So what are the suitable investment? There are some investments that fit into emergency fund. There are some investments that are high yield. So take for instance the money market, the forex market. Please don't go into those things without getting educated on them. For those of you that are interested in the forex aspect, there's a link below where we are training people on the art of trading the forex market, especially with algorithm and how they can have access to extra funds. So for you that you are looking at passive income, you want to look at corporate bonds, you want to look at treasury bills, you want to look at dividend payment. If yours is for retirement plan, then you want to look at investing in stocks that provide annual dividends and so on and so forth. The last one, or the fourth, is understand your risk appetite. Am I ready to lose? What amount of money can I afford to lose? What is the impact of this loss to me? So when you are writing and creating your budget, these are the things that you want to really look at. So you look at your risk category. There are low risks, there are medium risks, there are high risk investments. So when you are preparing your budget, you put all these factors into consideration. So we've talked about your fixed expenses, your fund expenses, and your future expenses. It's under the future expenses that we have all these other aspects, which is the most critical aspect. The bottom line is this: for you to track your expenses properly, you need this budget. Follow the 50-30-20 budget rule and pay attention to your future, which is the investment aspect, because that is what will surely guarantee your future. So by following these steps, you will not only manage your money better, but you also achieve financial freedom. If you've enjoyed this training so far, kindly click on the subscribe button and the like button also. This will ensure that the algorithm recommends this video to those that should see it. For those of you that will need training, especially in the forex aspect, we've started a kind of training to help people have a better understanding on the forex market. So you can click on the link below to join the group so that you can have this training schedule for you. Hoping to see you in the next episode. This is your friend and partner, Omishola Popola. Do have a wonderful day. Bye.
Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong,